Key factors affecting home affordability today. Every time there's a news segment about the housing market, we hear about the affordability challenges buyers are facing today. Those headlines are focused on how much mortgage rates have climbed this year. And while it's true rates have risen dramatically, it's important to remember they aren't the only factor in the affordability equation. Here are 3 measures used to establish home affordability: home prices, mortgage rates, and wages. Let's look closely at each one. 1. Mortgage rates. This is the factor most people are focused on when they talk about home buying conditions today. So far, current rates are almost 4 full percentage points higher than they were at the beginning of the year. U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in rates in over 50 years. That increase in mortgage rates is impacting how much it costs to finance a home purchase, creating a challenge for many buyers that's pricing some out of the market. While the current global uncertainty makes it difficult to project where mortgage rates will go in the future, experts do say that rates will likely remain high as long as inflation does. 2. Home prices. Home prices have made headlines over the past few years because they skyrocketed during the pandemic. Now, the most recent home price index from S&P Case-Shiller shows home values continued to decelerate for a 5th consecutive month. This deceleration is happening because higher mortgage rates are moderating demand, and as a result, easing the buyer competition and bidding wars that previously drove prices up. What's worth noting, though, is how much higher home prices still are than they were before the pandemic. Even now, we have a long way to go to get to more normal levels of home price appreciation, which is historically closer to 4%. When mortgage rates and home prices are high, affordability and your purchasing power become a greater challenge. But while prices are still elevated in many markets, some areas are seeing slight declines. It all depends on your local market. For insight into what's happening in your area, reach out to a trusted real estate professional. 3. Wages. The one big positive component in the affordability equation is the increase in American wages. As the BLS reports, median weekly earnings of the nation's 120.2 million full-time wage and salary workers increased 6.9% over the last year. So when you think about affordability, remember the full picture includes more than just mortgage rates. Home prices and wages need to be factored in as well. Because wages have been rising, they're a big reason why serious buyers are still purchasing homes this year. To learn more, let's connect today and make sure you have a trusted lender so you're able to make an informed decision if you're planning to buy or sell a home right now.